I know we talked a lot about kind of your guys' thought process, but you've seen a lot. You've been doing this for a long time. Perception of investors and the types of investors you're having conversations about in real time. What is their feedback today in 2025, and what are they kind of telling you?
Yeah, so we started to see what I would consider reverse solicitation in the institutional space and crypto kind of kick up really significantly in September of last year. So I think there was a little bit of an element back then of if, depending on which way the election goes, we want to have an opinion about the space, forgetting about whether or not we want to invest. But that, or I guess I call it September, October of last year to today, is a very different environment than prior to that for a couple of years. Because prior to that, even for dating back to 17 and 18, in waves, there were typically in those institutions that are investing, there'd be one or maybe two people inside of the organization that were crypto cheerleaders. And they would just be like, yes, this is the best thing. And we need to be involved. We need to invest. And, they're either younger or they're sort of middle of the organization looking up and saying, hey, knocking on the ceiling, like we need to focus on this. And, the CEOs or CIOs of those big organizations and institutions were just sort of like, thank you, we're not doing anything. Um, and so we would interact and we'd have conversations with a lot of those folks who were, very passionate and understanding what we were doing. And some of them super sharp and asking good questions, but could never really get it across the finish line because from the top down just wasn't happening. And I think what had changed is in the fall of last year, the top was actually saying, the CIOs, the boards, the CEOs of these big organizations, institutional investors that are like, yeah, we must have an opinion. We need to have an idea of what's happening to have an opinion. So go do the research. So it came from the top down being like, okay, it's time to spend energy and money and really time to get a sense of what these active managers are doing, what's available in passive. Go down the custody route. Is there actual custody here that can fit our risk parameters? And doing that work has come from that direction, and it's been real. It's been good conversations that have been from, at least from our perspective, institutional investors that have very large balance sheets. I was I've been traveling around, I'll be in Canada next week, and traveling around the U.S. I was in the Middle East. There's a lot of bigger institutional investors that are taking the process seriously and looking at active management as the next kind of step into the space, which is I think why we're getting a lot of attention, just at least from the strategies that we have, seem to fit.